another Back to Basics series, earnings season and what to expect typically.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at eXp Realty, aka the Trading Agent, and this is a Back to Basics series on earnings season and why it's important, what are the things you need to focus on, what to expect typically. Try to make this quick, but this is pretty important. Just a note too, if you are following the channel newer, the Discord room is open as of basically January 28th, 2023. Won't be open forever. If you're interested in joining, check it out. So earnings season, what are the things that you need to think about? Well, you need to think about the direction the market is, has, and will be going. That's one of the first things that you need to be aware of. Because if you've been trading long enough, you've seen stocks react to bad earnings, good. You've seen bad earnings be bad. You've seen good earnings, good earnings, bad, whatever. It's very hard to predict. And that's where I always tell people, no matter if you have the whisper numbers, and even if you know it's coming, you don't know the reaction. So I've always been a fan of the second mouse gets the cheese, the first one gets the trap. So if you're trying to anticipate the earnings direction by playing options or gambling, I wish you good luck. This is not the video for that. I mean, it might help you with if you're in swing trading mode and thinking of what to do going into options and how to trade a stock with options going into earnings or the swing. But typically, I try not to predict the earnings. I'd rather react. So, but what do you think about how to enter in earnings and what's to expect? Well, that's where I'd like to talk about this. So, typically going into any earnings season, the market's either up or down. If it's sideways, it's really hard to know initially how earnings are going to react. Typically, earnings is bullish. Now, people might argue, whoa, really? Yes, typically it is bullish because think about what the average CEO / representative of the companies that are speaking during earnings are going to say. They're going to try to cheerlead stocks. They're going to try to always paint the rosiest picture possible. And if they kitchen sink the quarter, sometimes the market likes that too, because looking back, now what? All the worst is known potentially. So that's where earnings typically has a seasonally bullish feel to it. However, there are some recurring patterns within earnings. So going into earnings, if a stock is up, you better be careful because you don't know if everything well is priced in. Just same thing as down. If something's down big going into earnings, it's probably going to have a rally. So that's where I always try to explain to people, like, look at where something is in the charts to be aware of what's going on. And I can just pull up two financials pretty quickly to show you that. Man, that was just a bunch of junk. Sorry, there's some like misprints because of there's some glitches on the New York Stock Exchange. So, for example, say like Morgan Stanley, right? Bad news cooked in. They talked about cutting workforce, chopping, runs up into earnings, gaps up. Well, remember the financials are always going to be at the early part of earnings season. Now what? It looks like it's a sell the news kind of thing, right? Right? So at this point, if you're looking at the chart, you had to be aware. Like it's now again, when you say down, up, it's all relative. But this thing is not near the lows. It's also not near the highs either from last year. So I'm not surprised that going into earnings, coming off the lows, it rallied up. But you can look at this and go, well, what about, say, for example, Microsoft, right? Well, how bad are the actual earnings? Doesn't really matter, though, sometimes, right? It's starting the trend up, gap down, rally back. But these names have been absolutely destroyed. And that's where I'm not surprised. And a part of me says, hey, you probably should have held some of this stuff going into earnings. We talked about Tesla, weeks ago. You could buy it down here, and then it rallied on its earnings. Even though, and this is the thing, which, God forbid, if you're being, neutral, the earnings have been absolutely dog doo-doo. Bad. Very bad. Like, anytime I read these reports, 90% of them have had bad guidance and bad guidance or removing guidance completely. Typically, a company doesn't remove guidance unless it's really that bad. So what were you saying? So what's the point again? You typically rise into earnings if you're down, sideways, choppy, typically, right? Because think about what earnings is. It's a liquidity event too, right? The market makers know this. So if you start rising at the beginning of earnings, this is where you got to be a little nervous. Now you have to start thinking about the tendencies for what? Everyone's excited. Everyone's saying, oh, it's priced in. Well, now here comes the next round in batches of earnings, and they come in, weekly lots essentially, where the market down into earnings will rally. If it's up into earnings, the first lot will be down, and that's where we talked about when the financials came out to start the month. Or sorry, during OPEX. Here you go, dropped, and now again, relative markets, pretty much down. So you're not surprised it rallied a little bit into earnings. And here was your pullback on the financials. Now we started rallying again. And this is, every candle's green. Opens low, closes high, even if they are a little sloppy. Well, here's the next round of earnings, right? You got Amazon, Google, Apple, FOMC stuff. Now, this is where end of month, a lot of things go into play. If these things rally into their earnings, you got to be careful of now what? Buy the rumor, sell the news. So I hope this helps. Trying to keep it real simple, but ultimately, earnings is a very big crapshoot. People trying to predict the beforehand usually get ripped. You can roll the dice and you can win some, you lose some, but the best trade's always after. But always keep in mind, typically earnings will react bullishly because CEOs, management, they're always going to be trying to pump. And if they're not, then they got really problems. But be careful. A stock that could be near the lows, it could rally on this. Sometimes, and this is where people who try to pretend that they're omnipotent and can I can tell you this is what's going to happen. Telling you. Sometimes you don't know if this is the sign of at a bottom. The C-suite team want the stock to dump so they can start buying it. They can talk about the past and they'll try to be forward looking, but maybe they have something in their pocket where they want to buy more shares and they want to tip off all their friends. The market's rigged. I've told you, it's to make the most amount of money for the most amount of people. So think about, though, ultimately what earnings season does to people is they're trying to read and interpret in between the lines. And I'm just telling you, right now, it's really hard in general because bad news can be good news. Bad news can be bad news. And so you just have to be thoughtful of stocks that are at lows going into earnings, stocks that are at highs going into earnings, and then if they're in between, good luck. I just always concerned, for example, say something like as we go into next week, you look at Apple, right? This is a big rally, right? Do the math on that. Every $12 is 10%. You go from 125 up to 145. It's almost rallied 20%. Okay, well, up 20% into earnings. Is that a buy the rumor, sell the news? Or does it play the Morgan Stanley card? And when I say Morgan Stanley card, it's just like the reaction that Morgan Stanley had. It started making a little run, gapped up, then it was gone. And when I say gone, going nowhere. So as the market's risen, this is held tight. This to me actually looks very distributive. Keep that in mind. Think about the bigger picture here. So going forward, earnings season, pretty much the peak of it is next week. All of the big names, the S&P 500 names will be in the next week to 2 weeks. If you have any questions, please reach out. This is not easy, but just be careful. I know I said it's typically bullish, but you have to remember. Well, what, Dan? What do you have to remember? If the market's up into earnings, at some point there might be a sell the news effect again. You saw it here. Boom, right? And think about it's every 3 months, right? Quarterly, right? March, April, you chop. Sorry, I'm like, what? Here goes the chop. Boom. Okay. What's the next one, right? If you go January, April, July, this was the bottom. Then started the run up, right? Okay, when's the next one? It's typically October, right? Choppy, sloppy. It's not easy. Doing this for 20 years, bear market versus bull market earnings. You have to just be aware. Well, be aware of what? Ultimately, the narratives that the market is spinning. And this is where it gets really complicated. And you have to be very thoughtful of, okay, I could be absolutely dead wrong. Because I still anticipate the recession coming. I think they've tried to do everything they can, and higher rates are the only way to get rid of inflation. If you want to stamp out inflation, they really need to press it. Now, I know people are going to say, oh, well, they can't afford the fiscal deficit, can't do this. No, as much as the liquidity they poured in created the bubble, they have to deflate the bubble as much as possible to be what? Thoughtful of future potential growth. Because again, if inflation anchors beyond the percentages that they want, you got major problems, y'all. Anyway, that's a whole nother video. Hope this makes sense. Just be thoughtful. Again, earnings, not easy. Second mouse gets the cheese if you're going to play earnings. If you have trades that have done really well up into a earnings, more than likely you should probably take the profits. If it's a stock that's been really crappy, don't do anything. Let the earnings play out. If you have to do something, I'm telling you, wait till after the earnings announcement. Because the person who tries to gamble and anticipate the reaction is the one who takes on the biggest risk. I hope that helps. Hit me up if you have any questions. Stop by the Discord room. The link will be in the description below. I will talk to you later.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.